Joining us right now is Nick Timiraos. He is the chief economics correspondent at the Wall Street Journal. His latest article is titled "Bond Sell-Off Threatens Hopes for the Economy's Soft Landing." Also, Brenda Vignello, who is chief investment officer at Sandhill Global Advisors. Welcome to both of you. Nick, let's start talking about what's happening with this rise we've seen in interest rates. There's been a lot of speculation lately, including an article from Kevin Warsh today in the Wall Street Journal, an op-ed that suggests things have really become unhinged and the Fed is not controlling it at this point. It's bond market investors who are doing that. What do you think?
Yeah, no, Kevin raises a fair point. I mean, this looks like you've had a rise or a shock here in term premium, and it's not clear what the Fed can really do at this point if that's what is driving this. You know, by one hand, this is what the Fed has been wanting to see all year, tighter financial conditions, but it's a little bit, Becky, like hitting that glass ketchup bottle. You keep hitting it, nothing comes out, and then everything comes out all at once.
And
at some point, exactly, all over the tie, and you're not sure, you know, at what point is the Fed going to say, okay, this is enough tightening in financial conditions? So I'm with Steve Leisman in the last segment. I don't expect to hear, you know, an immediate change anytime soon. You're going to have to see the data weaken or some kind of market accident to get this to stop. If this was Fed-driven, then, you know, Fed words could change it. But I don't see why they would step in here at this point.
Would they step in, or I guess does it at least mean that they're not going to hike rates again? They don't have to do that because the work's already been done?
That's just it. So, yeah, so, you know, the case for a November rate increase is going down because you've gone up 50 basis points in the 10-year Treasury in the last month. You've gone up almost a point since the last rate increase in July. And so the case for raising rates in November, it already seemed pretty weak. I mean, Powell at the last press conference 2 weeks ago saying proceed carefully 6 times. And December's still a long time away. There's still more data to come out. But if we sustain these tighter financial conditions, then the market is finally doing the work of the Fed. And so it means the Fed doesn't have to do as much.
Hey, Brenda, we watch every time interest rate yields go up. You can see the inverse reaction for the equities. Right now, Dow futures are indicated off by about 130. Is this simply the idea that, look, the stock market looks less attractive if you can get a much higher yield on a longer term investment?
I think it's that, and I also think it's what Nick was just alluding to, and that is that with interest rates higher, that puts more pressure on the economy potentially. So there is a risk that we do see more of an economic slowdown happening. Certainly not seeing it in the current moment, but that's certainly a possibility. But I would say, you know, when you look at how you're going to allocate assets, when suddenly you can lock in yields of around 5% on the 10-year, which thankfully would come down a little bit versus where we were at a few days ago, but that creates competition, especially when you look at an individual investor in a high tax state. You can buy a treasury bond, it's tax advantaged, and lock that yield in for a long time. And if inflation continues coming down, that real yield just increases. So I absolutely think that it creates more competition in terms of assets, trying to find a home that will deliver a decent return, and who can argue with a risk-free return.
Nick, how does the Fed look at this? Are they relieved that the market is kind of doing its work for it, or are they worried because they've kind of lost control?
Well, that's a great question, Becky. You know, I think the Fed prefers to see things unfold orderly. And obviously, you know, market conditions, the traders I talk to say that, you know, conditions are orderly. This sell-off has been happening in an orderly manner, but it's rapid, right? And so, you know, the Fed, before the next meeting, they're going to get another economic forecast from the staff. It's in the Teal book. And if you go back and look at 2013, July of 2013, when we had just had the taper tantrum, they're going to get a set of projections about what this increase in yields, if it's sustained, if you have a higher positive term premium, what is that going to do to inflation? What is that going to do to unemployment? What is that going to do to growth? That's going to have an effect. And so they have to worry at some point about getting more than they bargained for. And I'm not suggesting that we're there yet, but you don't want to see things happen just kind of snap of your hands. You'd rather see it happen over maybe a little bit longer period of time.
Nick, do they have the ability to temper market sentiment with their words? We just were talking to Steve about that. That
yeah.
if it were
It's
to
a great
get out
question.
he thinks that they could take 50 basis points off by, I don't know, just even admitting the possibility of a cut at some point in the future. Other people think if it gets totally unmoored, that the Fed's, that the bond market's going to do what it's going to do, no matter what they say, if it gets bad enough.
I guess I'm not as convinced as Steve is, and I respect Steve a great deal, but I'm not as convinced as he is that this was caused by the Fed or that the Fed could come out and say something and fix it, or that they would want to. I mean, they've been talking about higher for longer. They've been talking about running off their balance sheet even after they're cutting. And so to do something now to change that, it could look panicky. You know, people are out there talking about, oh, are they going to change QT? Why would they do that? Unless there's some sort of market disruption and a serious one. I mean, remember, this is a Fed that hiked through a banking crisis or ruckus, whatever you want to call it, back in March and May. So I think the bar is high here for them to change things. Could the leadership come out and provide more soothing words at some point? I guess that's a possibility, but it risks looking like an overreaction at the same time. So I think they're in a very kind of tricky spot right here if this sell-off continues.
Hey, Brenda, what are you telling people to do right now? Where do you see value? Would you be saying go ahead, lock in some of these longer-term returns? Are there areas of the equity market that you think are potentially a bargain if prices continue to drop?
Yeah, well, I certainly think it makes sense to have some exposure to bonds in this environment, even though that has been painful if you've had longer duration bonds. But nevertheless, that makes a lot of sense. On the equity side, I think sticking with high-quality companies that don't have a lot of leverage, that have a high probability of having earnings come in at or above expectations, and that have a good, solid story in terms of being able to improve profit margins. There are a handful in large cap tech that meet those qualifications, companies like Amazon and Salesforce, where valuation is still reasonable. Also, if we look in other areas like healthcare, for example, the healthcare sector really has not participated in the market recovery that we've seen transpire this year. So lots of interesting values there. Even the company like Abbott Labs, for example, that has a core business that's really growing nicely. But yet the company is still kind of working through the COVID test kits and how those were such a positive, and we're now overlapping a period of strength on that side. But if you look at the core business, there's still a lot of value to be had there. So I think there are absolutely still opportunities on the equity side. But I think maintaining a diversified portfolio and including some bonds and considering lengthening duration, I think makes a lot of sense in this environment.